All right, welcome back to Talk Tickers. Today, we are diving into American States Water, ticker AWR. Their third quarter 2025 results just dropped, and frankly, they've created a real puzzle for investors.
I mean, look at this. The company absolutely crushed it in Q3. The numbers look fantastic. And yet, the stock is down 10% over the last year. So, what's going on? That's the central question we're going to unpack. Why the huge disconnect?
Okay, so let's start with the good news, and there's a lot of it. The company posted earnings of $1.06 per share. Now, that beat what the analysts on Wall Street were predicting by a solid 6 cents. That's a nearly 6% positive surprise, which is always great to see. And it wasn't just the earnings. The top line, the revenue, was also incredibly strong. We're talking over $182 million, which is up almost 13% from this time last year. You have to remember, in the utility world, things are usually slow and steady, so a growth number like that, it's seriously impressive. So with a blowout quarter like that, you'd think the stock would just take off, right? Well, no. The market basically just shrugged. The stock moved up a measly 1.2% on the day. I mean, it's a game, sure, but it's such a muted reaction, it's a huge signal that investors are looking past these great headline numbers and are worried about something else. So, what exactly was behind these great numbers? Let's peel back the onion and look at the drivers of this Q3 performance. The biggest factor by far was regulatory approval. The main engine here was getting the green light on new rate decisions from the California Public Utilities Commission, or the CPUC. They basically got permission to charge customers more, and those new, higher rates kicked in this quarter and went straight to the bottom line. And when you look at where that growth came from, it was pretty broad-based. The core water and electric businesses saw healthy bumps from those new rates, but look at that. The biggest contributor was actually a segment called ASUS, which brought in an extra $8.4 million. So what on earth is ASUS? ASUS stands for American States Utility Services. You can kind of think of it as AWR's secret weapon. It's their non-regulated business, and what they do is operate and maintain water systems on U.S. military bases through these really long-term contracts. It's a fantastic growth driver and really makes them stand out from their peers. And this ASUS business is just on an absolute tear. Its contribution to earnings per share shot up by a massive 72% compared to last year. And management is telling investors this isn't a one-time thing. They expect the growth to continue right through 2025 and 2026, and they have a backlog of almost $29 million in new projects to prove it. It's the high-growth engine inside this otherwise steady utility. Okay, so that was the quarter, but a great quarter doesn't happen in a vacuum. Let's zoom out a bit and look at the bigger picture, the headwinds and the company's strategy. And this slide, this really gets to the heart of the matter. This is why we're having this conversation. Despite all that operational success, the stock has been a huge laggard. Over the past year, AWR is down almost 11%. At the same time, the broader utility sector is up over 11%, and the S&P 500 is up almost 15%. I mean, that is just a massive, massive underperformance. Yet, if you listen to the earnings call, you wouldn't hear a hint of that worry. The CEO, Bob Sprowls, was all confidence. He said, "We are optimistic about the future," pointing to strong growth in their core business. And this is that disconnect we're trying to figure out, a really confident management team on one side and a very skeptical market on the other. Now, part of that skepticism might come down to strategy. See, AWR is focused on growing organically and making these small tuck-in acquisitions. But the rest of the industry is in the middle of this huge consolidation wave with massive mergers happening. So some investors look at AWR and worry that its smaller scale is a disadvantage, that they're getting left behind as their competitors get bigger and more efficient. So what does this all mean for the next call? Let's wrap this up with our analysis and our official rating. It really all boils down to this one simple question. Was this fantastic quarter a real turning point, a sign that the market finally gets it? Or are those headwinds that have been dragging the stock down for a year still there, lurking under the surface? So let's look at the bull case versus the bear case. The bulls will point to that impressive 10.4% growth in their rate base. That's the value of the assets they can earn a return on. They'll also highlight the momentum in that ASUS business and its history of consistent dividend hikes. The bears, on the other hand, they're worried. They see persistent risks from being in California, wildfires, a tough regulatory environment, plus that awful stock performance and its smaller size. Okay, so after weighing all these factors, our rating on American States Water is market perform. And here's why.
There is no doubt this is a solid, well-run company with predictable growth. But the market isn't wrong to be cautious about those California-specific risks. They're real, and because of that risk and that chronic underperformance, we think the stock's current valuation is pretty fair, which probably limits its ability to outperform its peers in the near term.
So, what should you watch for moving forward? In the fourth quarter, keep an eye on any new regulatory filings. Then, in the first quarter of next year, we're waiting for a big decision on new solar and battery projects. And in the first half of 2026, the company's going to file its next major electric rate case. These are the key events that are going to shape the story from here. And as always, just a quick reminder, this analysis is for informational purposes only and is not financial advice.